Good morning and welcome to the New York Times. I want to start by saying it is so great to see so many of you in person, and I want to offer a special thanks to those of you who traveled to New York to be here with us today. We are here today because the New York Times is flourishing and our business has reached an inflection. In February, as many of you know, we announced the next phase of our company's strategy and a new target milestone of 15 million subscribers by 2027. Now, today is about drilling down on that strategy so that you can be as excited about it as we are. We'll talk about why we believe we are still in the early stages of penetrating a large and growing TAM with products that are in demand and highly differentiated. We'll detail the virtuous cycle that underpins our model, and we'll demonstrate that thanks to steady and deliberate investment over many years, our dominant and our most durable revenue stream, digital subscriptions, is now at a scale that we can target sustained profit growth even as we continue to invest to take advantage of an enormous opportunity. So today is also about introducing you to a team of leaders who will make this all happen. And let me start by properly introducing myself. I joined the Times 9 years ago as head of advertising. I took on subscriptions a couple years later, and then I served as chief operating officer for 3 years before becoming CEO in 2020. So for nearly a decade, I have been deeply involved in the radical transformation of this place, as have all of my colleagues who you're going to meet today. So I'm delighted to introduce you to these folks, and I have to say I have been so proud to work alongside all of them for much of my tenure. I'll start with A.G. Sulzberger, whose family's commitment to the Times has spanned 5 generations. As publisher, A.G. ensures that our journalism is independent and of the highest quality, and as chairman, that we're on a path for sustainable long-term growth. Now, A.G. led our newsroom's transformation into a thriving digital-first operation, and he's also played a huge role in stewarding the Times to get to the favorable economic position that we enjoy today. He's going to talk to you today about the unique role that the Times plays in the world and about how our quality and our depth and our breadth are the foundation of our business success. After A.G. and I talk, you're going to hear from Alex Hardiman, who's our Chief Product Officer. She's going to share our product vision and our strategy for meeting what is now a really wide range of consumer needs. Alex has been at the Times for more than a dozen years with an intermission that included a brief stint at Facebook. Alex is going to be followed by David Perpich, who, like A.G., is a member of the Ochs-Sulzberger family. David is now the publisher of The Athletic, which he's going to talk about in a lot of detail. And what you should also know about him is that David led the launch of our digital pay model more than a decade ago. He helped create our cooking and our games products, and he oversaw the acquisition of Wirecutter and ran it for a few years after we acquired it. You'll also hear today from Hannah Yang. Hannah's our Chief Growth Officer. She's going to describe the many levers that we have for subscriber and ARPU growth, including our multi-product bundle. Hannah came up through the ranks of our subscription business, and she has led it through its steepest arc of growth that we've seen so far. And Roland Caputo, our CFO, who many of you know very well, will conclude with what all of this means financially. And I'm very happy to say we also have a number of colleagues, other colleagues who aren't presenting, but who will join us either for Q&A or lunch or both. And let me just name them. We have our new head of advertising here, Lisa Howard. We have our CMO, David Rubin, CTO, Jason Sobel, our Chief Data Officer, Hannah Poferol, our Chief Human Resources Officer, Jackie Welch, General Counsel Diane Brayton, and our Chief Strategy Officer, Will Bardeen. Now, most of this group has worked together for years. And what binds us as a team, beyond our confidence in our ability to execute together, is a deep passion for and a commitment to the mission of the New York Times, which is to seek the truth and to help people understand the world. And that mission underpins our business success. It's what attracts an audience of 50 to 100 million every week, the vast majority of whom are not yet subscribers. It's why the most talented journalists want to work here, and increasingly, it's what inspires engineers and data scientists and product managers and designers and marketers and ad people to come here too. We have transformed our business radically over the years, but that mission has stayed the same, and it has been and it will always be foundational to our ability to create value for our shareholders. So many of you know the story of our transformation in broad strokes, but I want to share just a few highlights really to give you a sense of this team's capacity to execute together. In 2016, which was about a year into the last phase of our growth strategy, the Times had fewer than 2 million digital subscriptions, and we had only 2 paid digital subscription products, news and crosswords. 2/3 of the company's revenue in 2016 still came from print. Total company revenue was shrinking. Only 30% of our 2 principal revenue streams, advertising and subscriptions, came from digital. Digital advertising was actually the larger of those 2 streams, but its long-term prospects seemed pretty uncertain in the shadow of the big digital platforms. Subscriptions were our largest revenue stream at that point, but they were heavily weighted to print. And while we had a clear vision for transforming the company, and at that point we're on the path to doing so, sustainable profit growth was elusive as print declines largely offset our digital growth. So today, the picture looks entirely different. Since 2016, digital subscriptions have grown more than 400%. In addition to our core news product, we now have 3 products that have each amassed more than 1 million subscriptions each: Cooking, Games, and The Athletic. And we have a budding subscription business in Wirecutter, which until last year was monetized primarily as an affiliate business. Today, digital generates a significant majority of our company's revenue, and 2/3 of that digital revenue comes from our most durable work subscriptions. Digital subscriptions are not just our fastest growing revenue stream, but they're also our largest. We also have a strong digital ad business with high-performing ad products and a continually expanding suite of first-party data. We're debt-free, we have a healthy balance sheet, and that gives us plenty of runway to advance our strategy, to weather storms, and to return capital to shareholders. And importantly, we have overcome the decade-long period in which our growing digital gains were offset by declines in print. Last year, we grew adjusted operating profit 34% to $335 million, and we're targeting sustained, attractive midterm AOP growth from a digital business that continues to scale. So we set 2 goals for ourselves in the last phase of our strategy. The first one was to double our digital revenue by 2020, and then to reach 10 million subscriptions by 2025. We achieved both of those goals ahead of schedule. Now, we did so because of strong execution, but we also did so because our transformation into a digital-first, subscription-first market leader has coincided with a handful of market trends, long-term market trends, that really play to our strengths. So let's talk about those trends. First, The global population is growing and it's becoming more educated and affluent. And we believe this has increased the demand for high quality news and information. And add to that the basic fact that we are living in consequential and deeply uncertain times with big global stories unfolding in virtually every aspect of society. So that's the first thing. Second, more people are paying for digital news. The percentage of Americans who say they're paying has more than doubled since 2016 from 9% to 21%. Third, the next generation, Gen Z and millennials, overwhelmingly prefer to consume their news digitally, suggesting that we are still in the early innings of a great shift toward paid digital news and information and away from TV and radio and print. And finally, there's just our bedrock belief that the value of quality digital journalism is increasing as the supply of low-quality content online actually makes it harder, not easier, for people to get to what they need. And together, these trends point to an enormous, once-in-a-generation opportunity to deliver high-quality news and information in spaces where authority and trust really matter. So let's talk about that opportunity. At the peak of print, approximately half of all American households subscribed to one or more daily newspapers, and tens of millions of English speakers internationally did so as well. And we assume that most people didn't just get news from those newspapers. They got the recaps of last night's game, and they got recipes and puzzles and shopping advice and all kinds of guidance and inspiration. And while many of those newspapers have been eroded by years of cuts or even shuttered, the needs that they met endure. And in this context, our vision is to become the essential subscription for every curious English-speaking person seeking to understand and engage with the world. That's our strategy. Now, doing so will require us to execute on three key objectives. The first is to continue to win in news and be the world's best news destination. Second objective is to create more value for more people by offering leading lifestyle products that help people make the most of their lives and their passions. And third, to put those two things I just described together in a more expansive and connected product experience that makes the New York Times indispensable in the daily lives of millions and millions of people. Now, as I said earlier, we started this next phase of our strategy with a new subscriber target of 15 million subscribers by year-end 2027. That compares to just over 9 million subscribers as of the first quarter, which includes our acquisition of The Athletic. This goal, importantly, reflects a shift in our emphasis from counting individual subscriptions to counting total subscribers, which focus more on our penetration of the market and do a better job of reflecting our improving economics. It's important to say we view 15 million as another mile marker and not the finish line. And getting there means a lot of important things. It means more people consuming trustworthy journalism. It means a public armed with the facts and the context to make decisions. And it means a Times newsroom with the resources to keep finding and telling really important stories that might otherwise go untold. And we believe it means a larger and more profitable New York Times company with greater long-term value for shareholders. So in addition to our subscriber goal, we're targeting compound annual growth in AOP of between 9 and 12% over the next 3 to 5 years, which is more profit growth than we achieved on a CAGR basis in the last 5 years. The starting point for this growth target is our 2022 AOP. And we believe we can achieve this AOP target through attractive, sustainable revenue growth and increased leverage in digital, which will drive improvement in consolidated margins starting in 2023. And we expect to pursue a disciplined capital return approach with the strong free cash flow that our model generates. So let's talk now about our value creation thesis, which is built on 5 pillars. The first is our high-quality portfolio of journalism and lifestyle products. We have been investing to build this portfolio for almost 2 centuries, broadly speaking, and for more than a decade digitally. This is our competitive advantage, and it's the source of our value as a company. Second, this highly differentiated product portfolio positions us to pursue a large and a growing TAM. We're already the market leader in news, and we see a highly attractive market that we believe expands with our growing portfolio and has significant runway for further penetration. 3, our model itself is advantaged, which we're going to show you in detail today, with favorable unit economics, numerous levers for value creation, and multiple revenue streams. 4, based on the investments we have made to date and the scale we've begun to achieve, we believe our model will lead to increased AOP even as print continues to decline and even as we continue investing in our growth. And finally, we believe our model is and expect it will continue to be increasingly cash generative. So we're going to talk in detail about each of these pillars today. I want to start with just a few words about our product portfolio. We believe that each of our products is differentially valuable compared to its competitors, and that our whole portfolio is more valuable than the sum of its parts. Our news product has approximately twice as many digital subscriptions as the next closest reported competitor, and this is important, as much engaged audience on a weekly and monthly basis as many of the largest free news sites. News generates enormous audience and engagement, and it has the capacity to drive audience and attention to everything else we offer. Cooking and games are already market leaders and are early in their planned growth trajectories, and we believe both have real runway to continue to attract audience and interest, as the addition of Wordle to our games portfolio demonstrated. The Athletic, which covers virtually every major sports team and league in professional sports, is one of the largest sports journalism subscription businesses. But for the majority of its existence, The Athletic had very limited access for non-subscribers, which is why only a relatively small number of people are even aware that it exists. We're beginning to change that. We more than tripled Wirecutter's audience since we acquired it in 2016, with most of the growth coming in the last few years. It's new as a subscription service with a strong value proposition in a space in which the category leader has millions of paying members. All to say, we believe each of these products has plenty of room for further growth, and each can be appended to the others and to our unrivaled news product in an all-access bundle that offers the full promise of the New York Times. That's what our essential subscription strategy is really all about. Getting millions more people to experience the full promise of our product portfolio. And doing so begins and ends with our ability to maintain our lead as the preeminent news and information destination. And to talk about that, I am delighted to welcome my colleague and partner, chairman and publisher, A.G. Sulzberger, to the stage, and I'll be back after A.G. talks. Thanks so much. So A.G. talked about our journalistic mission, which is inextricably linked to our growth and shareholder value creation. And our commitment to that mission is what got us to where we are today. As free digital content flooded the information ecosystem over the last decade, we doubled down on original, independent, trustworthy journalism and experiences. And that focus not only transformed our business, but it enabled us to pioneer a growing market for paid digital news and information. So let's talk about that market and our plans to continue penetrating it. AG mentioned this, I'm going to say it again. At peak news moments, as many as half of all adult Americans come to our digital news product. On a weekly basis, we attract an average audience of 50 to 100 million, and as of the first quarter of this year, we have nearly 50 million weekly users across our lifestyle products. And people don't just come, they give us their email addresses, they come back, and they convert at healthy rates. So we now have more than 135 million registrations, the majority of which came in recent years, and we continue to add them at a healthy pace. As Hannah will talk about in more detail later, beyond registrations, we converted our most recent million subscribers at as high a rate as the million before them. And we're increasingly seeing people convert not just for a single product, but by adding other products or by buying our multi-product bundle. And the latest research helps explain why. Our own surveys, combined with data from the Reuters Institute, suggest that there are 135 million adults worldwide who are already paying or willing to pay for one or more subscriptions to English language, news, sports coverage, puzzles, recipes, shopping advice, or podcasting. And the data also suggest that half of the TAM, this is important, is currently open to Times products in at least one of these categories, and over a third of the TAM is open to products in at least two categories. In other words, our audience behavior, our subscriber behavior, and the survey data all suggest that our target of 15 million subscribers by 2027 is eminently achievable. Now, another factor giving us a lot of confidence that we can penetrate our TAM is our unique approach to harnessing market demand. As AG described, the Times delivers big, sometimes even world-changing stories seen by millions and millions of people. But unlike entertainment brands, our model isn't solely based on producing events like elections or wars or extreme weather. They come for all kinds of moments of economic and societal consequence. They come for big sports and culture and entertainment events and for major holidays that require new cooking and gift ideas. And they come for the daily draw of solving puzzles and playing word games, or for the simple desire to be surprised and delighted by the unexpected thing that the New York Times thinks you should care about today, tomorrow, and the next day. Meaning, we have built a uniquely powerful collection of assets, content assets and product assets that can harness a diversity of audience interest all day, every day. And that is the starting point behind our attractive unit economics. So let's talk about those unit economics. The 2,500 people in our journalism and content creation operations produce many hundreds of stories and experiences each week, which draw tens of millions of users to our products. In fact, we reach into a large portion of that TAM that I just described every week. Once they come, our product experience is designed to get them to engage more deeply by registering, by sampling our work, and by building habits with our now 5 products or across our portfolio. There are multiple levers to do so, and Hannah and Alex and David are all going to talk about those in a lot more detail. We convert those users as early as possible in their journey, and more than 80% of our subscriptions are now organically driven versus coming through paid marketing, which means in recent years we have been able to halve our subscriber acquisition costs. The marginal cost to service an incremental digital subscriber after we have converted them is minimal, so even at low introductory prices, each new subscriber contributes to profit, meaning it's in our interest to convert and retain subscribers even at the bottom of the demand curve. And as you're going to see in Alex's presentation, a core part of our strategy is moving individual subscribers up the demand curve by providing them with more value within each product and across our product portfolio. And as subscriber tenure grows, the more they engage, the more value they experience, and the more revenue we're able to generate from them. Hannah is going to describe to you in detail how we're beginning to leverage the bundle as a catalyst to drive ARPU higher and also to maximize customer lifetime value. We already know that subscribers to our bundle, or those who buy more than one product from us, retain better and they pay more. And the early results of our increased focus on getting them to do so are really promising. As of the first quarter, we had 2.6 million subscribers paying for more than one product or for the bundle. Now, our unit economics become even more attractive when you consider the synergistic nature of our other revenue streams, particularly advertising. As our digital registration and our subscriber base grow, and as our product portfolio has expanded, we generate more and more first-party data across more formats and more contexts, which enable our high-performing ad products. What this means is that we monetize nearly every instance of engagement across the Times and our products, even at the very top of the funnel. And as our product portfolio expands, it broadens our appeal to advertisers with products like The Athletic and even Wordle, opening up new categories and new opportunities to which we can now apply a very well-honed playbook. And while advertising is more susceptible to macroeconomic headwinds than subscriptions, we are confident that our subscription-first approach will continue to make our ad business competitive for years to come. And we believe that digital advertising has real long-term growth potential and will continue to be a profitable revenue stream that can augment the growth of digital subscription revenues over the midterm. It's also worth saying Wirecutter's affiliate revenue has been a driver of our digital growth, growing five-fold since we acquired it in 2016. Now, let me touch one more time on how we expect all of this to translate into financial performance. Roland is going to do this at the end of the presentations in a lot more detail. Based on the scale that we have achieved in digital subscriptions, we're targeting an AOP CAGR of between 9 and 12% over the next 3 to 5 years, with 2022 as the base year. This target assumes, this is important, our cash-generative print product will continue to be in long-term decline, which we expect will be a headwind of 200 to 300 basis points on the CAGR of AOP during this period. For 2022, we continue to expect to grow AOP in our core business before the impact of The Athletic. Though, as we've said before, we don't expect that growth to entirely offset the dilutive impact of The Athletic on a consolidated basis. We expect the improvement I've just described in AOP to come from continued revenue growth, driven largely by digital subscriber growth and moderate ARPU expansion, augmented by digital advertising growth. Consistent with recent industry commentary, we have factored into this forecast a lower level of economic activity in the near term and some inflationary pressure. A prolonged recessionary environment or accelerating inflationary pressure could impact our ability to achieve our AOP target. Now, Given what we believe is a sizable runway for growth still ahead, we believe the best way to maximize long-term profit and to create shareholder value is to continue to invest in our product portfolio. But while we do this, we're seeing the benefits of prior investments, and our midterm AOP growth targets reflect a commitment to staying disciplined in that level of investment. We expect to show improved leverage from our digital products as we go, and we're targeting consolidated margin improvement beginning in 2023 with the potential for some variability from year to year, depending primarily on advertising performance. Beyond the midterm, we believe there is real potential to continue to scale our model and to improve our profitability by further penetrating the TAM. Given the cash-generative nature of our model, we expect to be in a position to return capital to shareholders through dividends and share buybacks at a rate of between 25% and 50% over the medium term. Now, before I hand it off to Alex, I want to leave you with a few key takeaways. The moat that we've built around our business is deep, wide, and a direct result of the strategic focus and targeted investment and clear progress that we have made over the last 5 years. The team that you will meet today has successfully executed to transform this business into a digital-first, subscription-first market leader. The demand for what we do and the differentially valuable way we do it is growing. We believe we have built a sizable lead in news, but we are not stopping there, and that we have the right audience and tech and team and playbook to widen that lead in news and build leadership in large and complementary spaces, which means our runway to attract more consumers and more revenue from existing consumers is enormous. And finally, we believe we're at an inflection point as we realize more of the value that our subscription-first multi-revenue stream model can generate, and we still have a large and a profitable opportunity ahead of us. So I'd like now to turn it over to my colleague, Alex Hardiman, who's going to give you a detailed overview of our products and how they work together to create value for consumers and for shareholders. Thank you so much, and I'll see you in a little bit.